We are of the opinion at Brooklyn FI that clients are willing to pay more to know about the future than they are about the past. Now, when it comes to...
I love that. Yes.
Yeah, so that's one of the themes that I harp on whenever I speak publicly about AI or what have you, or about the value of financial planning as compared to like tax compliance or what have you. Now, you do need to have the tax compliance and the historical. You got to have books and you got to have tax returns to establish a prediction for the future, of course.
Welcome to Accounting High.
Introducing the star of our show,
Senior Mason.
We're gonna have a problem here.
Oh,
Wow.
students, you are in for a treat today. We've got with us the returning benefactor of the whole school here, Mr. Senior Mason. Students, you may remember Shane from like our early on. He was one of the early guests, might have been 16 or something like that. We'll put the notes in there. Shane has been traveling the world here ever since. I think you were in New York when we first recorded, when you first came on the show. You moved to LA, brief period there.
Oh my God, yeah.
And how long have you been in Mexico, sir?
Oof, wow, you're talking about LA. That was like summer. That must have been winter of 21. That was a long time ago. I've been in Mexico City, for dear listener, about 3 years now. Yeah,
Okay.
I bought this house in July of last year, but I've been living here since January. There's like whole rent to own. We don't have enough time for that. But yeah, I've been in here about 3 years. I spend the winters down here, and then I do a lot of traveling during the summers. So I've averaged about 50 flights per year the past 3 years. So I'm hoping not to do that again, but for reasons we'll discuss on this podcast, it might even be more for 2025 or 2026. So
Yeah, well,
we'll see.
The Globetrotter, Brooklyn FI, still the firm, still going strong. Let's go with some hard numbers to start with. So,
Yeah.
number of people first. Let's just start that. Number of people at Brooklyn FI.
I think last time we spoke, I'll give you the long answer. There's now 25, but there might have even been more last time we spoke because we specialize in helping. We work in tech, essentially. We have a lot of clients that work in tech, both in the accounting space and in the wealth management space. So we've been in a bit of a tech recession in terms of liquidity events. In 2019, 18, 2021, we set records almost every year for IPOs. And then we've been in a bit of an industry recession in terms of liquidity events, 22, 23, 24.
Now, what does that mean for our students? You set a record for IPOs.
So in 2021 was the all-time, like going back to like 1935 or something when it comes to initial public offerings that have happened in America.
Okay, so the collective we're talking about America, right?
Yes, America. There was over 1,000 IPOs in 2021, and the average is like 300. So we had like triple the average as everyone was trying to, with low interest rates, come high valuations for stocks because the economy is trying to, it's very easy. So like essentially valuations were super high. So if you owned a startup, you were getting multiples that were just insane. And by startup, I mean like Series C, D, E, F, like huge companies like Palantir, Spotify, et cetera. We're all going public during that time period. So my company was helping them deal with that sudden influx of cash. So we were growing we were Inc. 5000 for a couple of years in a row, and we were growing at like over 100% per year for like 4 years in a row. So it was really tough on the seams of the company were struggling. Sure. We had a lot of turnover in terms of employees that were like hopping on board and be like, oh my God, this is like, they say that your firm will fail from indigestion instead of starvation is a fun little anecdote, or what do we call that?
I haven't heard that one. I love that one.
Yeah.
So, yeah.
We were choking on whatever we were eating back then. And since then, we've gotten really good at dealing with growth. And we've been growing
at a full plate. You just kept eating, though. That was the thing back then. So what changed?
Yeah. We were hungry back then. I was a younger man back then.
It's only a couple of years ago. But what
well,
changed?
We were,
What
it
changed?
ages you. Working every weekend for years will age you. You know this.
Yeah.
I mean, it was like tax season for 12 months, straight it was healthy. Like especially when you're an owner, like you're like, all right, like all this equity value is getting added to the firm. Like, let's keep doing this. But as an employee, you're just like, what are we doing here? Like, I can't keep this up. So we couldn't hire fast enough to keep and trained fast enough, because we work in a really specific niche of like equity compensation and like taxation of that. And like, we like to think we're the best in the country at that type of advisory work, but it's really hard to train someone up quickly on that. We were choking on growth there for a while. But we've calmed down. Like we kind of like macroeconomic environments have forced us to slow down. So we were hiring for growth. We were at like 32 or 33 employees. Now we're down to 25 as we've let some people age out and we haven't been hiring very heavily. But we're expecting we don't know what's going on with this new administration. And like, unfortunately, when it comes to inflation, the Federal Reserve will keep interest rates high to tone that down. But low interest rates are really good for my company because it allows for valuations to go up for companies and allows them to go public. So we'll see. Who knows where we're going? We're like a month into this administration, and it's been quite volatile. We've had a couple plane crashes. I'm not going to get political, but who knows what's coming down the pipeline. I expect there to be like the dust will settle on this new administration by the end of the year. And in 2026, a lot more companies will feel comfortable going public. I hope, because it's good for the firm, but
it's good for business. So
exactly.
Now back to some hard numbers. What is the top line right now? And how do you have that split up differently? Like what are the services that you're offering?
Yes. So sorry about that. I kind of went on a tangent.
No, I like it. I love tangents.
I think the tax returns are getting wrapped up for 2024 right now. I think we'll do about 4.3 million in revenue. Margins I'll call them solid. I'll call them typical for a firm. We've always wanted to be an enterprise that has a lower margin but has higher growth and has more spread out it's not a lifestyle practice is what I'll say. Our goal is not net income. I think if we really wanted to, we could get the margins up to 40, 50%, but we would have to really, really fire people and get everyone we don't want to do that. But they're healthy. Since we've spoken, we've added partners as well. We've added John Owens, our managing partner, who does a fantastic job at the firm. He's young, super hungry. He works really hard. He's definitely working a lot of like weekends that we used to work. He's a partner now. We're adding our tax director as a partner this year as well. And then hopefully that would be our fifth partner in January of 26. So that's all lined up. We'll see how things go.
How does that work? When you say we're adding partners, what do you guys do to add the partner? What's the logistics of that?
Logistically, we offer them a range of amounts that they can buy in at. We give them a multiple that is fair. It's probably discounted from obviously if we were selling to private equity, it would be a higher multiple because you're selling control of the firm and all that. We really believe in employee ownership at the firm. So we expect to probably do rounds. This isn't a promise, but we hope to do rounds fairly routinely at the firm to bring in, if you're a tax manager here for 5+ years and you're kind of capped out in terms of like where your career can go, we hope to add you as minority partners in the future. So we're really excited about that. Our whole firm is based on, we advise people that own equity in bigger firms. So that's like part of our DNA is employees owning part of wherever they work at. So
your ethos.
Exactly. So anyway, mechanically, we talk to our lawyers. We come up with an amount that we offer. That person decides on how much they want to buy. And then we've been seller financing it to them. So if
like
it's typically
payroll deduction or something like that.
Well, once they make partner, there's no more payroll, right? So they have to go full, they have to go guaranteed payment. So we will set a flat salary for partners. They'll get that as guaranteed each month. And then whatever the firm owns, whatever the distribution is, depends on how much they own, of course, and whatever the profitability of the firm is at that point in time. We give them the option of just taking no distribution and like applying that to the loan that it's kind of funny how like your partner will, like my partners owe me money. We've been working together a long time, so it's not as awkward as it sounds, but it's not something that some people like to do. A lot of people will go to third parties and say, you need to get your financing from like a Live Oak Bank or like another firm that specializes in small practice loans, but the interest rates are typically higher.
Keep it in the family.
Well, they're going to get a better interest rate with us, and it keeps it in the family. Yeah. So hopefully, as their payments or their loan will have a fixed amount, but hopefully, as the firm grows, their profits will also grow, and it'll accelerate the payoff of their loan, and then eventually they can just enjoy the fruits of their percentage of the firm ownership, and they don't have to pay off any loans in the future. So, did that answer your question? I could have got more
Absolutely.
specific about interest
Absolutely.
rates and terms and all that, but I don't think you can use your imagination for that,
Yeah.
dear listener.
And the team is fully distributed. Do you guys ever get together as a team?
Yes, we do. So we have a fully remote firm, 7 in the Philippines. I'm in Mexico. Almost everyone else is in the United States, from California to Florida, New York, Washington, Montana, all over the place. So that's been fun for compliance reasons. But so we have a strategy that we use every other year. We get everyone together. It's getting 20-ish people all in one place for a retreat. That's not when you don't have an office. Like, I know Acuity does Acuity Con, but they have an office where they bring everyone together,
Yeah,
right?
they have
So
a
that's
central
like,
home base.
that's cool. But like, getting 20 people on planes is just like kind of a nightmare. So we only do that once every other year. And then in the off years, we have a tax or accounting retreat separate from a financial planning / investment management retreat. So he kind of breaks it up a little bit. You get the more intimate one with your close team every other year. And then every other year you meet everybody, you see everybody. So this July, we did our like, I need a better term for this, but this July we're doing our all hands retreat in upstate New York. We usually pair it with a company client event in Brooklyn or in Manhattan, and we'll invite all of our clients, and it's a big party. And then after that, we'll go upstate to like we have this cool like farm we're going to with a bunch of like shacks on it, and we'll have like a movie night, and we'll probably play Can Jam or whatever.
Parcheesi,
Yeah, whatever. Well, somebody will show their ass assuredly, like metaphorically, like get too drunk or whatever. But it's okay.
Yeah.
It's just us together, and it'll be okay. Not that I endorse that, but yes, we do.
So-
we do. Yeah.
Yeah, a disclaimer.
Yeah.
So the home base is still kind of New York then, Brooklyn, or that's where you guys usually will target.
Yeah.
It's in the name.
Well. Yeah, so we got founded in Brooklyn in 2017, and then COVID distributed us. But it's still a part of our ethos, right? It's a part of like, we work hard, we can handle the high pressure of New York City. We expect a lot of our clients are really smart folks. So it's just still a part of our ethos. We call ourselves BKFI more often now because about a quarter of our clients are outside of New York, right? Or I think it's more like 35% are outside of New York. We have a lot in San Francisco, wherever the tech hubs are, Austin, Miami, San Francisco, Boston, Seattle. And then since the world went remote, we just have a ton of people that like moved home to Ohio after COVID and stuff like that. So you don't have to be in Brooklyn, but it is a part of where we got founded. And just because the number one referral source for accounting and financial planning is word of mouth, people hang out at the park, they're New Yorkers, it kind of spreads that way. So yeah, that's when we do client events. I'll be doing a client event in San Francisco in April though, because I'll be there to do some Intuit advising, and I'm gonna attach a little client event there, have a nice dinner with clients there. So yeah.
Oh, that's dope. So tell me about the distribution of the team in as far as logistics of what they're doing. So you guys, do you still do tax returns?
Oh yeah.
Yes.
Oh yeah. We
Still
do it
taxes.
we do it for every one of our clients. So it has been included. So I guess we're a little different. I guess we should back up a bit. And because we're like more of a wealth we got started as a tax firm, and we did one-off taxes, got into financial planning about our 7-year anniversaries in April.
Maybe it's worth sharing that story of how you guys did that, because that's pretty cool. You had you were working with small businesses, right? If I recall correctly. And it was like the spouses that you guys were really interested in. They were getting some of these big W-2s and stuff. So why don't you go ahead and tell the story? Yeah.
Yeah. I'll do the spark note since I've told it 50 times. But essentially, I was a PwC tax guy. Went to a mid-sized firm and started a tax practice on the side because I'm that kind of guy, I guess, and just masochistic. And then I realized I was working with a lot of Schedule C 1040s, and then I was charging maybe $600 for those if I was lucky. Realized that all of the spouses of these freelancers in Brooklyn have got millions of dollars of options in these New York startups. Like Spotify was what really got us started. Realized that a lot of their financial planning problems were really tax problems, and realized that there was a lot of gold in their hills of doing financial planning for these equity compensation recipients. Met AJ, my fantastic business partner. Her and I got together 7 years ago and created this whole wealth management firm, Brooklyn FI, which is separate from the tax practice, but for all intents and purposes, they're one and the same.
Okay. Well, when you're talking about the firm, you're talking
collectively,
about one.
yeah.
4.5 million is both of them, right?
Yes, exactly. Yeah. We charge a flat fee. Our average client pays us about $13,000 a year, and it includes a tax return.
So that's like a subscription. It sounds like it's like inclusive.
Exactly. Yes, it's a subscription. It's all you can plan, all you can eat, hang out with us. We meet with our clients about 6
All
times
the
per
indigestion
year.
you can handle.
Right. We also, so we do taxes. We will do accounting. That'll be a separate fee if we do the small business accounting and taxes for the businesses.
The CAS type stuff.
We have a CAS practice. Yes. It's about 5 to 10% of our overall revenue. And then we also manage assets. So about 40% of our revenue is from investing for our clients, building portfolios, rebalancing them, doing the due diligence on those portfolios, helping clients diversify out of their concentrated positions at the companies that they work for. A typical client will come to us and they'll say, hey, 40% of my net worth is in Palantir or it's in some tech company, and I need to, like, in a tax efficient way, diversify out. So I need to sell this and that or the other, but I need to be tax aware of that. So you need to have an investment mind and a tax mind. So our CPAs work very closely with the certified financial planners at the firm. And that's what the magic of Brooklyn FI is. It's all under one roof. There's no
so
game
like
of telephone.
CPA, CFP, and they're
exactly. And they're in the same room. You don't want them in separate rooms.
No.
Yeah.
Wow. All right. So it is all in the family, and that's what the client's buying into. This is like an Apple-esque type thing where you're serving it to them under one roof, and it's cohesive. It's the software and the hardware together.
Right. You email one person, and there's a team of 7 or 8 people with different specialties, whether they're operations, tax, accounting, financial planning, and you have a suite of people, if you're willing to pay for it, which about 700 people are at my firm. And
you have about 700 clients? Okay.
Yeah. Yeah. If you include, like, so it's about, we call them households in financial planning or wealth management, because we have 415 households that pay us that $13K per month. But a household includes spouses. Sometimes it's like there'll be a mom or father thrown in, but it's about 650, 700 people. Yeah. That can call us and give us problems, that have the right to email us, so to speak.
Yeah. Well, they have that line, that direct line. That's where the indigestion is that where the indigestion comes in, when you have too many people calling that line at once and the lines get flooded. Like, what happens when an event happens? Like, something big happens.
The hard part was at the beginning when you're like, you go from 6 to 7 people, you've just increased your staff by 16%. That's hard to handle, right? But when you're at 25 people, if we hire one more person, that's 120. That's a 4% growth in your staff, right? So it's a lot easier. And you'll hear a lot of business advisors say, like, the hardest is from like 5 to 15 or 20 employees, because you go from direct reporting for 5 people, which one person can handle, but then you start having to figure out, like, it's hard to get that jump. That you got to work every weekend to get through that threshold, I feel like. But we're there now. But the indigestion that we spoke about is, like, if we've got 4 or we've got like 7 advisors that have to receive emails, each one of them can be at, let's say, 80% capacity. But in the old days, there was maybe 4 advisors that were all at 95% capacity, just because it's so hard to hire, train, advise. And if you're growing too fast, some people will leave. So you kind of like get stuck in the mud. But we're through that at this point. And so, like, adding people with like big, like, a lot of our clients have already gone through the onboarding process at this point. Sure. And now when a new one comes in, it's just a lot easier to give them all that attention that they need when they first come on board. And you can spread that out amongst your advisors like butter across bread. It's a lot easier to do now.
Yeah. So you said you have about 7 top advisors that are like managing all the clients in their relationship.
Yeah. And the CPAs, they do client management, but it's less like they don't own the client. They just, whenever a tax problem comes in, the CPAs kind of like answer that question for them. They get the tax return done. Every client gets a tax return, and every client gets a tax projection at year end. So in a nice way, for tax purposes, it smooths out the year for the CPAs, because instead of having all this pressure during tax season, I think we put like 80% of our clients on extension. Like, a lot of them go on extension.
Right.
And that's fine, because they all got a tax projection in October. So it's just about the paperwork, right? Like, the money's paid in.
It's about managing their expectations too. And when you're doing that in October, it gives them ample time to start making some adjustments in that same year or thereafter.
Yep. Exactly. So they know in October, the way that we frame it is like, yeah, you're going to go on extension, but we already told you in October what your bill's going to be. It's just about collecting the 1099. So there's less pressures on you as a client to get us your documents. So like, wait till the summertime, like when it's more chill. And like, also like when you have the complexities that our clients have, the amended 1099s are constantly flowing in. Everything's like, we have to review everything because even the payroll teams at these tech companies, like they don't always know how to report the equity compensation technicalities. I've had handwritten documents come in because when you're growing or you're about to go public, you're less concerned as a company, you're less concerned about your employees' W-2s being 100% accurate than you are about making sure that the finances are put together to go through a giant liquidity event for the company itself. So we have to like push back a lot on these companies and be like, hey, these incentive stock options are misreported. Can you please amend them? Otherwise, I'll have to have a fight with the IRS about how that should have been reported. So there's a lot of value add for our
handwritten note to talk about the amendment or whatever it is.
Yeah, I've had amended a W-2, I think 3 times. Like I've told the staff at a company, like, hey, this is how they need to be reported. And then they amend it and send it to me and it's wrong again. And I'm like, guys, we've sent you a spreadsheet. Like this is how it needs to happen. And I think they're trying to avoid like penalties because of Social Security wasn't withheld correctly. So like, I get it, but you can't put that on my client. Like we advocate for them instead of, having them go directly for the IRS. So
you're that intermediary. Oh, that's dope.
Yeah.
So how much client work are you still handling these days?
I haven't had a client in like 3 years. It's been a while. Yeah,
you're working directly with the team.
Yeah, well, we have 3 directors now, director of planning, director of tax and accounting, and then our managing partner. So like that's the pyramid. And I talk to the managing partner and the directors a lot, but I don't.
Who you talk to. You don't even talk with the team much.
Sometimes, yeah, like at the retreats we hang out, but like I don't like should like the like imagine
You're not
like
stressing that this return had to get filed or anything like that.
I don't even know. Yeah, I have no idea.
Yeah, that's a good way to be. Yeah.
Yeah, it's awesome. I mean, don't get me wrong. We worked every weekend, like I said, for 7 years. But this was always the goal.
During your work phase too, where that's what you were doing. You're like a
phase.
nomad. Yeah, I don't know what I call this phase. You're still doing content though, and you're still doing stuff to keep your finger on the pulse, though, right? Like you guys have a podcast. You mentioned you didn't talk about the podcast, but you said Liquidity event, and that's the name of your show, right? You and Alex.
It is. Yeah, it's the Liquidity event. Comes out every Friday, recorded on Tuesdays. Please check it out. AJ and I, me and Ali Jane, we just talk about the news, talk about financial planning and investments, and really just shoot the and have a good time and laugh. I think it's funny, but I think AJ's funny. So yeah, check that out if you want to.
So what's the purpose of that? I know you guys met on a podcast.
So the purpose of that is threefold, I would say. A lot of prospects will listen to it before they become clients because it gives them an idea of the vibes of the firm. Mm-hmm. The thing about wealth management is like that it's really sticky business. If you have someone manage your assets, on average, the retention rate for that is about 97% lifetime. So you don't switch it very often. So you want to make sure that you get along with those people before you have them manage your assets. So the podcast gives prospects an idea of how long they'll be working with us. 2, it gives candidates that want to work with us as an employee an idea of what their bosses will be like as well. Because it's the culture of the firm is evident. It's very transparent right there in the podcast. And 3, AJ and I do not get to hang out in person very often. So every Tuesday we get to catch up on each other's lives. It gives like a bit of background for the listeners, like what's going on with Shane and AJ's lives. AJ and I get to hang out. And it also allows us to stay on top of the news. It gives us a good excuse to do a few hours of research on what's going on in the financial planning, investment management, and accounting space every week. So it's not like moving the needle a ton. We love the podcast.
It keeps you tapped in to a lot of those things. Yeah.
Yeah, exactly. Also, my mother finally listened to it 140 episodes in, and she called me yesterday to let me know, to clarify on her educational background, because I said some mildly disparaging
You made a comment about your mom?
Well, I was like, I didn't know if
she's listening.
Well, I'm glad she is now. She never did before. So anyway, it gives people a chance to, in this remote world, and I'm traveling all the time, it gives people an opportunity to stay in touch. And sometimes even colleagues will be like, I don't really know you, but I've listened to the podcast, so I feel like I know you, because there's this idea within the podcasting space. If you hear someone's voice in your head, you got AirPods in, that person's in your brain. It's like it creates this level of intimacy, like where if you finally do meet that person in person, you already know so much about them that like it just accelerates or pulls forward all of this intimacy. So yeah.
Have you guys ever missed a week?
For sure.
Do you miss weeks here and there? Yeah.
Well, sometimes AJ will miss, or I miss more often because I'll be in Japan for 2 weeks in March, so I'll be out. She's going to have guests on, and I don't feel like doing the podcast at 1 a.m. from Japan. So yeah, we miss occasionally. Yeah, John, our managing partner, will come on and add a ton of new flavor and fresh blood, and he's super smart, so it's great to have him on.
Let's talk about new ventures too. Software companies. What is this trend now with people starting software companies?
Yeah, we created a software company. So about 4 years ago, we realized that no software existed. I think it's a pretty common theme within a firm. You have a problem that no one's fixed. You get a wild hair. You think you can fix it. You hire a developer. And a few $100,000 later, you're in the hole and realizing that you've created this product that should probably go to market. You love it, you like it, you've got a vision for it, and that's where I'm at. We've created this software called Gemifi, Gemifi.co. It's specifically intended for
Gemifi with a G or a J?
With a G, like a gem, like a
Gemini.
Yeah, right.
Gemifi.
It's intended to do really quick tax projections and also cash flow projections for clients that have unique types of income. So it was built for people that have equity compensation. So it'll map out quickly using our algorithm the best way to diversify out of a concentrated position with our restricted stock unit, stock options. But we're going to raise money soon to expand the use cases to be more for accountants as well that don't have that type of stuff, but that want to model out, hey, I've got this type. What happens to our business income over the next 3 years if it grows 20%, or for all different types of use cases. So we built it for ourselves. It is made our financial advisors and our CPAs much more efficient with modeling out these tax projections. It does state stuff as well. It does multi-state stuff, but it can be a lot better. So we're going to raise money this year to be deployed in the engineering space. I'm really excited about it.
So especially, it was built for you guys, though. It was built for something to use in-house to solve that problem, right?
Yeah, we use it in-house to specifically get what we call trading plans out to our clients, which is, hey, over the next 4 years, this is the specific stock tax lots that you need to sell in order to get the cash that you need to buy this house, buy this car, minimize your taxes, avoid alternative minimum tax. Yeah, like it's got a tax engine underneath of it. I'm surprised we were able to get a developer to build it, but I just met with him earlier today. He's been our same guy for 4 years, and I told him something that we need to develop, and he came back at me with like this tax issue that we were going to have. It was like, he's like, well, is it going to show the capital gains tax rates or the regular tax rates? And I was like, Matt, I'm so proud of you. You know taxes inside and out now, man. Like, this is crazy. So yeah.
He's learning as he's building this.
He said that was the hardest thing for him. That was the hardest part for him. Explaining tax rules apparently are harder than like coding up a web app that has. Who would have thought? Yeah. So yeah, we're doing that. I'm doing demos. I've got 5 demos next week. So I'm kind of shifting away from being a CPA to being more of a product manager, which is fun. It's fun to be back in, like, I still work on Brooklynify a lot, but it's fun to have this other thing. It's like a new venture for us that I think has legs.
So Gemifi, yes. The FI, is it like Brooklyn FI?
It's a part of it, yes.
Little play on that.
It was originally Guided Equity Management, so we shortened it to GEM, like a jewel.
And so then GEM is an acronym, though, too.
Yes, exactly. All right. And then we realized there was like 5. I actually ran into a girl here in Mexico City at a party, and she was like, I work at this company called GEM. I was like, well, that's funny. I have a startup called GEM. And I went to their website, and it was like, they're like Series C or something. They've like raised like $1 billion. I was like, oh shit! Like we're not going to be able to hold on to this for very. Yeah. Even their logo was really similar to ours, and I was like, okay, we got to pivot. And as anyone that runs a company or has founded a company knows, like naming and logos and branding, all that stuff is super hard. It's like harder than it needs to be. So we're running with Gemifi. No one else has that, but it works for us. We're not going to focus on that too much. We're going to focus more on, does the product work? Is it buggy?
Yeah.
Is it applicable? Does it add value to accounting and financial planning firms?
Yeah. Well, first, let's say it's a very specific use case for you. And since you are the top firm in the country that does this, it's
self-proclaimed.
I know. I would have said quotes. Still, it's something that solves a specific need. And then you mentioned you kind of broadened it for general purposes. Mm-hmm. What was it that you made? Is it a tax planning or tax forecasting or cash flow forecasting? What is it that a general accountant can use this for?
Okay, so I'll give you an example. There's a lot of great financial planning tools out there and like tax planning tools that are great for next year. If we were to do one right now, a financial plan for somebody, it would start in 2026 because no financial planning tools want to get into the weeds of current year stuff. Now, some tax planning tools will do that. Like Lacert, you can go in there and say, I expect this person to make $300K this year, but it takes a while to figure out how much someone's going to make in the current year. With Gem, you put a paycheck in there and it extrapolates it out instantaneously to the end of the year.
Wow.
And then, so you just put the current paycheck
with
in.
Gemifi. Yeah.
Sorry, with Gemifi. Yes. Yes. Thank you. So it gets that in, and then it'll do the next 6-10 years quickly. And then it'll also say, you can also import someone's equity. We call it equity inventory. So they've got these grants from these different companies. You load those in quickly with the CSV, or it gets imported from a PDF. And you tell it, hey, I want you to sell all these over the next 6 years. It'll run that. It'll sell them through the tax software, and it'll show you how much your net cash flow will be over the next 6 years. So it gives you clarity quickly on where someone's going over the next 6 years in terms of their income. And you can see what their net cash flow is going to be. So that's what it does.
That's pretty fantastic. Is there a tax planning component to this?
You can compare 2 or 3 different plans very quickly and see the tax delta between them. So you can say if you sell out over 2 years versus 6 years, your equity, here's the difference in taxes. You can export that, show that to your client and say, you can do it live because it's so fast. There's a lot of visuals in there as well, like the amount of shares sold, the amount of net tax, the amount of alternative minimum tax. It even does the alternative minimum tax credit, which kind of freaks out a lot of people. Yeah, and then you can export a CSV and it says, here's the exact tax lots that you need to sell in each trading window for public companies that only have trading windows over the next 6, 8, 10 years so that the client knows what's going on. It also imports the fair market value of public companies. So as the client's RSUs vest, it'll show up in their taxable account, like in the platform, in the web app, so that we know what the basis is for those shares when we decide to go ahead and sell them. So it makes it a lot faster. Like we were using Excel spreadsheets and manually updating basis information. And there's just like a whole lot of third-party aggregation and then like error-prone stuff with Excel that is now mostly automated, and we're hoping to automate. Can you tell I'm excited about it, Scott?
I'm excited about it. Yeah.
Yeah. So we're stoked about it. So yeah, thanks for letting me plug that. I'm sorry, dear listener, for hearing a demo.
No apologies necessary. No apologies necessary, because this is all part of this whole evolution of the firm owner, right? Like you solved the problem in your firm, and the best software, like you said, the stories of the best software is always solving somebody's problem internally first.
Yeah, absolutely. We're huge fans. I've heard a lot of stories like that. Like I believe Tallyfor was like that. I've talked to those boys, those fellas, quite a bit about that. There's tax plan. Ignition. Yeah, I love the Ignition boys. I actually just had dinner with Ryan Embree last weekend in Mexico City. He was down here.
Shout out to Ryan Embree, yeah.
Yeah, we did. We talked to Guy at Ignition about their equity plan recently as well. So, yeah, hoping to keep it all in the family. Hoping to see a lot of these. I guess we're going to move into conference advertising, marketing mode, just like some of those other fellas have. I talked to T3 about getting a booth. They want $14,000 to have a booth. It's interesting seeing things from the other side, right? Like going and being a presenter from the other side. So
more investment, more marketing for that. That does require an entirely different hat. Is it an entirely separate company too already? or not yet?
Oh yeah, it's a separate C corp. Yeah, okay. We're gonna hopefully do, depending on a fundraise, we're gonna do an equity compensation stock plan for the developers and the marketing team and all that. So it'll be full circle.
Sounds like your specialty. Yeah, this is all. You'll advise that company too.
Yeah, full circle. Yeah, excited about it. Not to diminish what's going on with Brooklyn FI is still kicking ass. Like John and Caitlin and Dan, the directors, we're setting records for new clients for January of 2025. And we're rolling out new service models for like our elite clients that pay us over a certain amount of money with more white glove estate planning services. Things are going great over there as well. And like the podcast and the marketing, we have if anyone needs a fantastic marketing team to bolt on to their financial planning, probably a CAS practice as well, I've got a great one for them. They've been doing wonders for us for the past year.
Give them a shout out. Who's the company?
They're called Craft Impact. So yeah,
they start with craft breweries.
I don't remember where the craft name comes from, but they're a fractional CMO service. I know, they just kick ass. I'm a big fan. Yeah. Please don't take away their attention away from Brooklyn FI because we're having a great time with them. But if you're looking they're not cheap. They're north of $5,000 a month, so you have to have a solid budget to work with them. But they're fantastic. They're in our Slack channels. We do a Zoom call with them every week to discuss strategy. You're going to need multiple team members probably as well to like handle the strategies that they come up with to implement them. But if you've got that, you're like in that range or that size, then I would say, yeah, give them a call.
So before you hired a marketing company, you knew specifically who your target market was, who Brooklyn FI's ideal client was, right?
We've been niched for about 6 years. Yeah, equity compensation, that's all we talk about. It makes it a lot easier to do SEO tweaking, to write blog posts on that topic, to do webinars on that topic, etc. We have a webinar next month about going through an IPO because they're starting to pick back up again. Finally, there's a company called CoreWeave. That's an actual tech company that's going. There were IPOs throughout the past 3 years, but it would be like Weber Grills, which has been around for 70 years. So like there's not a lot of pent up private value that requires a specialized equity compensation expert to handle. Whereas if like with Palantir, they were created 7 years prior to their giant.
What does Palantir do?
I'm sorry, I keep bringing up Palantir.
You brought them up 4 times. I still don't know what they do.
Well, it's just like you get hooked on one company.
The reason I say that is because I saw a note, something about their stock going down today, and then somebody in the comments said, "What does Palantir even do?"
Well, it's private on purpose because they work in defense contracting. So they have very few clients, but they're giant clients. Like it'll be
Wales.
Like the United Kingdom will be their client. And there's a lot of joke. I mean, their story is really incredible. It's like what they do is they help with machine learning and artificial intelligence analysis of what's going on with the population to help predict what will happen in the future in terms of crime. They're like cops. Like they work in defense, like Lockheed Martin. Like some people have a political issue with what they do. A lot of it is private in nature because it's related to government.
Sounds like Minority Report.
Kind of, yeah. I mean, I don't want to.
The early stages of Minority Report. Yeah.
A bunch of geniuses at a company have figured out how to drive a ton of value by looking into the future, sifting through the haystack to find needles, essentially. And the needle is often preventing crime and terrorism.
It could be, large scale terrorism.
How much would we have paid to avoid 9/11? I mean, trillions of dollars. So, yeah.
But back to your point.
Sure.
Sidebarred.
Sorry, I was thinking about Palantir, which is a Lord of the Rings reference, by the way. The name is...
Is that what it is?
Yeah, Sauron had there were these 9 looking glasses that could allow you to see through time and space. And Saruman had one. I don't know if you remember from the movies. It's the orb or whatever. They were called the Palantirs. And Peter Thiel is a huge Lord of the Rings fan, and this is one of his startups in partnership with Alex Karp, who's the CEO. And yeah, so Lord of the Rings nerds, Lord of the Rings. Yeah, it's named after. Yeah.
Okay, well we got the lesson here. Now I know what it means.
Sure.
So,
but you get the analogy, like looking through.
Well, now let's through the looking glass. Let's go through that with Brooklyn FI. Where do you see this headed? You're almost at 5 million now. The firm itself What's your aspirations, or where do you see that headed in the future?
I forget the exact year, but our next goal is 10 million in revenue. I think it's 2028, maybe 2029.
Oh, wow. Okay. So
Yeah.
that is on track. Sounds like it.
Yeah, it's on track. I mean, it's hard to predict what's going to happen in 2027.
But that's why we have Palantir.
Yeah.
And that's why we have Gemifi.
Fair enough.
Gemifi is a projection model, right?
We are of the opinion at Brooklyn FI that clients are willing to pay more to know about the future than they are about the past. Now, when it comes to
I love that. Yes.
yeah, so that's one of the themes that I harp on whenever I speak publicly about AI or what have you, or about the value of financial planning as compared to like tax compliance or what have you. Now, you do need to have the tax compliance and the historical. You got to have books and you got to have tax returns to establish a prediction for the future, of course. So we think that's very critical. But yeah, we're very focused on the future. But Scott, like we haven't had a recession in the stock market since in like 15, 17 years.
We're ready.
We're one of the longest bull runs of all time. We've got quite a volatile administration going on right now. Tariffs could push up.
So the last big
inflation.
one was 2009, right? And what
Yes.
sparked that one?
Well, that was the Great Recession related.
The housing market stuff, right?
Mortgage-backed securities, collateralized debt obligations, the Big Short, all of that stuff is what triggered that. Shout out to you if you bought stocks. If you bought stock at the dip in 2009, Scott, I'm going to ask you, what do you think your return, 2x, 5x? What do you think your
8x, 10x.
10x. If you bought at the dip in 2009, the stock market, the S&P 500 in general, you have 10x your money in those 15 years. So that's why it's important to have an advisor to make sure that you continue to stay in the market, even if you just had stocks that went down in value at the low point of 2009. If you held them and didn't sell and panic, which is what a lot of the value of a financial advisor is making sure that you stay committed to your long-term goals and don't sell out and panic, then you have 10 extra money since then. So, like I said, it's a lot of the value comes from focusing on the future than focusing on the past, or people are willing to pay more for that.
I've just been sitting on stockpiles of cash waiting for that next event. That's when I'm going to invest. That's my investing day when we're in the worst part of it. But I'm not ready for it yet. We're not there.
Scott, I've got a saying for you. You love sayings. Time spent in the market is better than timing the market. Okay, so you're trying to time the market. I've got a great blog post for you, actually. It's called "Even God Couldn't Beat Tax Loss or Dollar Cost Averaging." It's about making sure a guy analyzed like the past 20 years of buying the dip every time versus constantly putting money into the market no matter what, and the dollar cost averaging, which is putting money into the market on a routine basis, whether it's every paycheck or every month, every quarter, what have you, because of the dividends that owning those stocks, reinvesting those, right, it snowballs. So even if you bought every dip perfectly, you still would have made more money dollar cost averaging into the market. So time in the market.
Sort of anecdotal to your 10x thing. I'm just making a joke because a lot of people, especially financial advisors, don't like the fact that you're sitting on cash. That's financial advisors are not happy about that either.
Yeah, last we spoke, you were hiring your advisors. Do you want to plug them?
Yeah, Backbone Planners. Yeah, they're good. I still don't put enough in the market that they would want me to. They would like. I still,
I'm sure they get paid more the more you put into the market.
Of course.
Right? So,
yes. Let's talk about the next steps of the future, though. So, do you see your role changing at Brooklyn FI? You guys are going to hit 10 million, or if you do you envision yourself more on the software side as that starts to take up more of your excitement?
Well, it's not about excitement. It's about best use. I mean, John, Caitlin, and Dan know how to run the firm. So I think I've always been of the opinion that once you've mastered something, you delegate it, which sounds counterintuitive. Like if you're the best at something at your firm, you should delegate it. Why? Because it gives somebody else an opportunity to become a master at that, to increase their value. And it gives you an opportunity to become a master of something else to increase your own value. So it becomes counterintuitive. I mean, you need to do it to generate the profits and the revenue to allow you to delegate that to somebody else. But I think that is a symptom of a very healthy firm. If once somebody recognizes that they have become a master of something, it's their responsibility to delegate that to somebody else to increase everybody's value firm-wide, which hopefully means that everybody can service more clients and grow the pie. And then my role, to answer your question, is essentially to sell my shares to the employees as they become masters and to become more and more of a minority partner over the coming years so that everybody can share in that wealth. Now, my share of the pie will get smaller, but the size of the pie, of course, will get bigger and bigger. So that's the vibe. And then as that's happening, AJ and I are kind of like board members of the firm at this point. We spend about 16 hours a week on Brooklyn FI. But over time, we will probably spend less and less as we delegate that stuff to employees, vendors, et cetera. So that's the vision.
You want to become a master at something new.
Yeah. I mean,
I'd like to spend your time learning new stuff.
I'd like to read some more fiction. Right. I'd like to spend some more time surfing, but at the same time, I think in my heart of hearts, I'm an entrepreneur and a businessman.
You weren't even a surfer when we met, but you're surfing now, right? You've learned, you've taken it up.
Yeah, I'm not a good surfer at all. I still surf a longboard and I still barely know how to read the waves, and I still barely ever even go. But I picked that up. Mexico, Puerto Escondido, like the whole Pacific coastline is just fantastic for surfing. So if you can deal with the locals, some guy tried to fight me last October because I didn't see him coming. It's a different story, but yeah, if you can deal with the localism, then yeah,
you got this. Okay, now explain the spelling of your name change here. Senor Mason, Mahson. Yeah.
So sometimes cultures can't pronounce each other's names. Right?
Escat. I get Escat all the time. They add an E at the beginning of my name.
Yeah. So they call me Chane or Sheen, which is like my Mexican ex-girlfriend. Her mom called me Sheen, like the clothing company, because she knew how to pronounce that. But so yeah,
do they say Shane, or no, I guess they wouldn't add an S to that.
Well, they don't have the hard A in Spanish, in Mexican Spanish, so they don't do A, like they can't do Shane. So they say John, they say Shane. So I just go by Johnny when I'm down here. Like if I have a reservation at a hotel or a restaurant, just Johnny. Yeah, okay. They got that down.
Dope. For our students here that are watching along, patiently following along at their firms, overwhelmed, and they got too much going on. How do you focus when you got so much going on?
Tactically, Pomodoro. Strategically, delegate. I don't know. I don't even know if I'm qualified to give advice, but
that might make you qualified. The fact that you don't think you're qualified.
But I already know that that's how people think, so maybe I'm manipulating you right now.
Steps ahead.
Manipulating. I'm a double agent when it comes to self-awareness. As I'm the more manipulative one.
Or you're the least aware of them all.
Yeah, I don't know. Deep work helped me out a lot. Throw your phone in the ocean is what I would say. Your phone is killing you. Delete Instagram.
That's the advice right there. Yeah.
Yeah.
Throw your phone in the ocean.
That's it. That's all. That's what I got. I don't practice what I preach always, but I think my best days are when
that going to be the name of your book when you write a book? Throw your phone in the ocean?
Yeah, that works. Yeah. That'll be the name of the. I got to start with a blog or something, or a Substack. By the way, read AJ's Substack about financial planning. It's Money Changes Everything. Since this is a plug episode of the podcast, she's got a great Substack about financial planning for real people called Money Changes Everything. So check that out.
All right. Throw your phone in the ocean, and then money changes everything.
Sure.
Do we have time for my anecdotal story of my phone getting stolen in Mexico and then money changing everything afterwards? So
yeah, you're the host.
Oh, I know. Yeah. I know we have time. So my phone got stolen out of my front pocket in Mexico, in the subways, Mexico City. And later on that day, I went to a casino and I won 90,000 pesos. Actually, over 2 days. I was in the casino for 2 days, and I won 90,000 pesos. I forgot what the conversion was, but it was enough to buy a new phone.
It's $4,500.
Yeah. It was. I had a great run. It was because my Spanish, I don't speak it, so I could sit at the table, and there was no table talking. There was none of that happening, and I wasn't over talking. I was just paying attention to the cards and the people, and I was letting them do the talking. And I won some money. Usually I lose in poker because I talk too much and I let it all out.
Oh, you were playing like No Limit Hold'em?
Texas Hold'em, yeah.
Oh, great.
Yeah. So yeah, that was my last Mexico. So I didn't have a phone, and it made for a much better experience overall.
See, throw your
And I
phone in
made
the
more money.
ocean, and you will make $5,000 after conversions. Yeah.
Dope. All right. Well, Shane, thanks for coming to Accounting High. It sounds like it's been a bit of a graduation. Like you've been graduating each phase along the way, and I think the next time we talk, you'll probably be head on into the software biz.
I think I switched majors, perhaps. So maybe that's the analogy. But
fair, yeah.
Yeah. Who would have thought talking about yourself for an hour would go by so fast?
So quick.
Yeah.
Thank you for joining us today, Mr.
Thanks, Scott.
Mason.
Good to see you.
Johnny.
Sheen Johnny Masson.
Class dismissed.
Adios, nos vemos.